hands up. So we will get back resuming our agenda for today, our program. And as I mentioned before our lunch break, this afternoon's discussions will all revolve around housing. And I know that's something that we're all feeling in our communities, and we're all searching for best practices and solutions. And there are no silver bullets. So basically, I just to give everyone a heads up from an agenda perspective, we're starting now at 1. Richard will come up in a moment and give his presentation. Mayor Rogers and I will each then share sort of like almost like a case study of our local context, what's happening on the ground in Miramichi and Fredericton. And then there'll be a panel discussion. And so all of this will take place now between 1 and 3. At 3 o'clock, we'll do our wrap up and get everybody on the road back home. So we've got 2 great hours of discussion here. And then we'll all head out on our way. But to kick things off, I know we were just having a discussion at our table for lunch. As best as we can, we're trying to live in a data-driven world and make data-driven, solutions and make our decisions based on those types of things. And data seems to be becoming more and more important and pertinent in every discussion we have. So in order to set the table for the discussion, I'm pleased to invite up New Brunswick economist Richard Saillant, who will paint a bit of a picture of some of the data around housing in our province. So everyone, please join me in a warm welcome for Richard Saillant.
Thank you very much, Mayor. Merci beaucoup. Merci d'être là en ces temps un peu incléments. The ride coming here this morning was an interesting one, and hopefully when some of us go back towards the east, that'll be a little quieter. So today, what I thought I'd do for the next 20 minutes or so is just share with you my thoughts on what I see in terms of the housing market dynamics in New Brunswick. I've been looking at that pretty much steadily for about 2 years now. And those who know me know that I enjoy trying to make sense of the data. It is a very new issue. It's a very new issue, at least from a public policy standpoint. And I would say that it emerged during the last election when we were reading in the newspapers a lot of stories of rents going up by very large amounts, talking $300-400, and people not really understanding what was going on. So you'll see it in the data that I'd present today, but I thought I'd do that in a very user-friendly way. So just present 5 key data points and then what I call 5 big questions about New Brunswick housing market dynamics, because the last thing I want to pretend here is that I'm an expert in this topic. It's a brand new topic for New Brunswick, and I'm not a housing market economist, but economics obviously explain quite a bit, and demographics, I would say, explain quite a bit of what's going on, as we will see. So I'll ask 5 big questions that I believe are probably some of the key questions that we need to figure out in order to provide a good policy response to this very tough, I would call it a wicked challenge. So without further ado, let's start with 5 key points about New Brunswick's housing market dynamics. The first one being that for the first time, I think, in living memory, New Brunswick's housing markets is actually hotter than virtually anywhere else in Canada. I would say that the Maritimes housing market is hotter than anywhere else in Canada. So it's melting up. I'm showing some data there that shows that home prices are, in red is New Brunswick. Home prices is on the left. You can see that it's growing much faster than in Canada as a whole. Same thing for average increase for all units of rental. And same thing for what you call same unit rents, meaning units for the same unit from one year to the next, because a lot of units are being added, and that's pushing rents higher. So the reason in the past why I think that New Brunswick's housing market did not participate, did not melt up when it did across Canada, is that supply could easily accommodate demand. And that was in part, no small part, related to the fact that our population was not growing as fast as it is right now. But there were times when our population was growing really fast, and you will see that supply was responding quite appropriately, which I will suggest today that it is not, and it's no one's fault, except for the reality that we have an aging population in this province, and we have a fast growing population. So point number two is just to show that the market is much tighter in New Brunswick than in Canada as a whole. On the left, you see the vacancy rates. In red is New Brunswick. And you can see that not that long ago, we had an ample supply of apartments in this province. And it was much higher than in Canada. And based on the latest data point from the CMHC, starting to date, it's October 2021, our vacancy rates were below 2%, whereas in Canada, they were around 3%. And in some places in Canada, such as the prairies, it was around 7%. So we're, I would say, in the red zone, and we'll talk about what happens when you enter that red zone from a price standpoint. But on the right, you see another indicator of our ability of the housing market to respond to increase in population. Normally, you'd expect, let's assume that your market is completely, it's really tight. You'd expect that if your supply is responding adequately, you'd expect your number of units to grow, basically in a way that reflects, you'd say that one household in New Brunswick is about 2.3 people. Okay, so you'd expect that your household, your ratio of unit completions to population growth to use housing completion to be 2.3, meaning that your population is growing, say, by 5,000, while you're having about 2,500 units that are being added to the marketplace. In New Brunswick now, it's 4.26, so it's twice as high as in Canada, which is an indicator that supply is falling behind, at least when you're looking at completions. It's only completions you need to look at right now because people can't live in an apartment that's not ready yet. Okay, so I'm talking looking in the back, rear view mirror, how many units were added and how much population did we add over the past 12 months? Does someone want to guess how much people was added, how much New Brunswick's population grew over the past 12 months? 14,000. Okay, so it's massive growth. Now, economics is, it's always fun when you see that economic theory actually works. And one of the things that you're going to see here is that in blue is the vacancy rate. When you had plenty of apartments, prices were not going up, they were going down. Your rent growth was below inflation. And as soon as your vacancy rate became tight, as soon as your market is tight, all of a sudden your prices start to escalate. So there's nothing here that is magical. It's just pure economics, because housing is a very, very inelastic good. What do I mean by that? Is that people will do whatever they can to stay housed. So whatever they need to do, they'll try to do it and pay escalating rents. Now, point number 4 here is and this is a dense chart, but I think it's important to go through it. The residential construction market, it is responding to growing demand for housing. Let's not think that it's not responding, it is. But I'm going to show you how it is responding and how it is. Oh, is that what it is? There we go. Okay. So fundamentally, what I've drawn here is New Brunswick's housing starts and population growth over the past 50 years. I'm going back quite a bit, but it's important to look at this. This year, what you're seeing is that this year, recently, we're at about 4,000 units annually, okay? If you look at the last 12 months, there's housing starts about 4,000 units. It's double the amount we had in 2017, so there is a response. However, it's barely at the same level as in the 2000s, and the population in the 2000s was declining in New Brunswick. Okay, our population is growing sharply, and we're barely at the level that we were in the 2000s when our population was declining. Okay, point number 2, look on the left, when New Brunswick was in the 6,000 or 7,000 in terms of the number of units being added in the 70s. That was when the baby boomers were forming households, okay? They were forming households, but at the same time, the market was awash with workers. So they had no issues responding to the demand because the supply was there, sorry. So the supply was there. So what you're seeing here is that we're certainly not anywhere near where we were before, but the kind of growth that New Brunswick's population is witnessing these days is about the same as during the 1970s. So it may well be that at some point our supply will escalate even more and that we will catch up a bit, okay? But I am arguing that for this to happen, we're going to need much more workers in this province. Okay. So how can we say whether 4,000 units is good enough or bad or not good enough for New Brunswick, given our demographic trends and everything else? Well, in a balanced market, you would expect the supply to respond to demand in a balanced way, meaning that there's demand in Miramichi, there's demand in Bathurst, there's demand in Edmundston, there's demand for houses, there's demand for condos. You'd expect all markets to respond more or less efficiently or in a balanced way. If you have a supply crunch, what you'd expect is for private developers to be very smart and focus on where you get the best risk-adjusted returns. You can't blame them for that. They're operating under market forces. So that's what you would need to expect. So what are we seeing in reality? Well, we're seeing in reality exactly the picture of an imbalanced market. In blue is the supply growth in the 3 CMAs. You're seeing it responding. In red is the supply growth outside the 3 CMAs. So there's no response outside the 3 CMAs. Yet in Miramichi, in Bathurst, and Campbellton, vacancy rates and the last time I checked were near zero. The population was growing somewhat, but you weren't seeing any additions to the rental stock, no growth. Now, maybe some apartments are being built, but if other people are converting their apartments into Airbnbs, the net addition is zero. So outside of the 3 cities, it's the desert. There's no response whatsoever. But the population is growing there too. And I'm seeing in certain cities, like the president of the Chamber of Commerce in Campbellton was saying that tomorrow morning, if they had housing, they could get 150 workers here just like that. And the community college was saying, if we could have housing, we could increase our number of students. So obviously there's demand for housing. There is a need for housing across the province, okay? Now, private developers are, as I said, I'm not blaming anyone for acting according to their self-interest. But I'm seeing a picture of a market that is not responding in a balanced manner. And if I was a developer, I'd focus in Moncton, Fredericton, or St. John, because these are larger cities whose population is more likely to grow than in the rest of the province in the future. They're more diverse economies, so less subject to shocks. And on top of that, they have a greater stock of older housing units, which means that if you run out of tenant magically in 10 or 15 years from now, it's not the new units that will lose tenants, it's the older ones. Okay, so it's less risky to invest in those communities. Whereas if you invest in a place like Tracadie, and we can talk about Tracadie later on during the debate, if you have 37% of your population that is baby boomers and 27% of your population that is above 65, well, unfortunately, no one's eternal. So if you've got a greater concentration of older individuals, the odds that you won't succeed in staving off population decline in the future are greater, which means that in 15 to 20 years from now, if I was a developer, I'd be concerned with running out of tenants, maybe not a developer, but an owner at least. So I think from a risk-adjusted standpoint, this could be explained. I'm not saying it explains everything, but I think so. And if you're looking at the other part of the imbalance in the market is that single detached market for homes, despite the big demand that we've seen from Southern Ontario residents recently, it's not growing all that much. It's apartments that's growing. And I would suggest it's higher end apartments. Why? Because they're the most profitable, I suspect. Okay, so that was point 5. Now I'm going to ask the questions. I've already asked some of them, but 5 big questions. Why is housing supply not responding outside the 3 CMAs? If you're an ardent believer in the forces of the market, you could ideologically say that it's a matter of time, the market will eventually respond. I've been thinking about that for a while, and now I'm not seeing it in the data. I'm not seeing the response. Maybe it will come, but so far I'm not seeing it outside the 3 CMAs. Why is that so? Is it a concern that the market will not bear rent levels needed to ensure profitability? I don't believe that. If you've got people willing to pay rents at a high level in Moncton and they'll earn similar salaries in Bathurst or in other places, and they won't have any choice. They'll have to pay the rent. There must be another explanation, or maybe some people will tell me that's the explanation. I don't know. I'm just asking. The other one, I think, which is more realistic, sorry about this, which is more realistic, is that With scarce labor, developers can cherry pick the least risky and most profitable opportunities. I would suggest typically at the higher end of the market in southern cities, and that's what we're seeing so far. And I also suggested early on that with baby boomers making up a much larger share of the population in the north, there's a possibility that owners may end up without tenants 15 or 20 years from now. That's just speculation. Whether people actually, developers act that way, I would say maybe they don't need to, because they know that the greatest opportunities are to be found at the higher end of the market in the three larger cities, because of the next slide, which is that labor is constrained. That's the labor force industry in New Brunswick since 2010. Now, there are many factors that can explain the steady decline in the number of construction workers, but let's remember that the industry's workforce is a big one. We have 30% of our population that's 55 or over in the construction industry. For the overall economy, it's around 24%. Residential construction activity has benefited from a decline in non-residential investment in recent years. I was looking at the chart. I can't get the data just for how many workers you've got in the residential versus non-residential, but a good proxy is to look at GDP data. GDP data tells you what's the share of the output that's residential versus non-residential. Historically, it's about 25% that's residential. Non-residential includes bridges, roads, commercial structures, engineered projects, all of that, okay? Now it's at 44%. Never seen that before. It's the highest ratio that I've ever seen. So the residential sector is drawing a lot of labor from the non-residential sector. Whether this is sustainable, I don't know. I'm just saying this seems to be the reality right now. Now, at some point, some big projects are going to come online. Just think about the DFO facility for $350 million, I believe, in Moncton. So at some point, there will be some demand for non-residential, okay? So if there's a message I'd like to leave you with in this presentation, is that we urgently need a bold, concerted strategy for expanding labor supply. I believe this is the key bottleneck. And if we can't deal with that bottleneck, everything else from a policy standpoint will be frustration, and also the likelihood that all you're going to do is escalate costs further. But it still means that we're going to have to make choices as a society, and that will be my last slide. I'm almost done. What happens when supply can't keep up with demand? Okay, let's ask ourselves that question. And my answer is what we see in the market these days. Big dogs will eat first. Those with greater means will be able to buy their way out by bidding up prices. If you're from Southern Ontario and you've cashed out on $1 billion home, you have the ability to buy a home in New Brunswick for 250, 300, 350,000. Doesn't matter all that much. If you're rich, you don't need to worry about escalating rents or home prices. You're okay. If you're a homeowner, you're also doing relatively okay, as long as municipalities in the province lower their tax rates when property prices increase. Just kidding. Now, big dogs, who are the big dogs? Well, there's several big dogs. Obviously, those are, there's on the household end that some people may have more money than others, obviously, but it's also from the industrial end. If you're sitting on a $50 million asset, or I don't know how much it's worth, but, and I won't name the business, but several tens of millions of dollars of assets in Saint-Quentin, and you're running out of labor, and housing is a major issue, at some point you've got very little choice but to say, you know what, I'll take care of this myself. If you're someone who is the biggest developer of frozen products in the world, and you are somewhere in the Acadian Peninsula and you want to welcome new workers, well, at some point you're going to say, well, let's build that thing. Okay, we're going to build housing. Okay, if you're a fish processor, you're running out of labor in Lamec, well, you can buy a house, split it in 4, and turn it into a bunch of housing units for your new workers. But someone is out a housing unit. Okay, so that takes us to point number 2, which is rental housing poverty. Meaning, I call it that way, you can call it whatever you want, but it's people having to downgrade. Okay, so lower income households having to pay more for a smaller place, share their units with others, or ending up without a permanent home. So you're having an issue here whereby people are being crowded out based on their means. Okay, and in the end, you're talking about homelessness. Now, the rent cap right now protects some tenants, but not all, because remember that when you have a rent cap, those who are looking for an apartment have to look for the apartments that are available. And those can be probably those that are being freed up, but also the new units. So you've got more people not ganging up, but bidding up asset prices for the few that are available. And you can see that situation right now with interest rates going really high. Some people might be no longer able to afford their homes, but they can afford an apartment. So what they're gonna end up doing is maybe they're gonna sell to a Southern Ontario owner and end up bidding up the asset prices on rentals, okay? So it's trickling down, and that's what I think we're seeing in New Brunswick today. And the last point I call deindustrialization, or what you can call New Brunswick's Dutch disease. The Dutch disease happened in the 70s in the Netherlands when they developed the North Sea oil industry. All of a sudden, they saw their industry, non-oil industry, decline rapidly. Why? Because it shot up the level of the currency, and therefore they were seeing deindustrialization. Well, if Gagnon, I can't pronounce that in English all that well, is no longer manufacturing jujubes in St. Stephen because they can't find housing, that's called a net loss for New Brunswick. If you're a tourism operator and you can't afford to pay higher wages so that your workers can afford higher rents, well, you end up closing the shop towards the end and you say, well, there's nothing I can do. So your export industry, and remember tourism is an export, are going down. So that's called the Dutch disease. And what you're seeing is that everything that needs to stay in New Brunswick will stay in New Brunswick. What is everything that needs to stay in New Brunswick? Stuff that is valuable, in certain natural resources industries, public services, local retail. And if you have more population, you need more local retail. And in Arisville Boulevard and everywhere, you're going to see more retail warehouses and retail activity going up, and Walmart building up places where you can you can distribute frozen products. So fundamentally, you're seeing the structure of your economy adjust to the fact that labor is scarce and housing is scarce. Okay, I'm almost done. Point number 4, won't supply catch a break with rising interest rates and society returning to some form of new normal? Because we've seen 14,000 population growth over the last 12 months. Obviously, the question to ask is this sustainable? And the answer to that is we really don't know. This is too new a phenomenon, people coming, following COVID. But we can say one thing, with the current interest rates shooting up, the affordability crisis in Southern Ontario, despite the fact that home prices are going down, it's not improving, it's worsening. The amount that you need to pay on housing is going up because interest rates, at least on average, interest rates are going up and people have to reset and borrow at higher levels. With the pandemic having demonstrated the effectiveness of work from home for some workers, New Brunswick could still see elevated flows of housing refugees from Southern Ontario for some time. I don't know when that's going to stop, but what we know is that there's still a big gap in the value of homes between New Brunswick and Southern Ontario. So the incentive is still there. Whether that will keep going at the pace that we've seen recently, I don't know. And I would suggest that we probably don't want it to keep going that way because it's going to, unless we figure out how to build much more housing in this province. Meanwhile, we have 4,000 more New Brunswickers reaching retirement age than working age each year. 12,000 people are reaching 65 every year versus 8,000 reaching the age of 15. So the major engine of growth that we're seeing right now is going to stay active. It's called baby boomers retiring from the workforce, stay active for at least another 10 years or so. Okay, so there's no reason why New Brunswick should not see, from a pure demographic standpoint, similar growth that we've seen in the past. And in the past, before the pandemic, we were talking 6 to 7, but we probably need 8 to 9. So I'm not surprised that we got 14 over the last 12 months, and we could see 10,000 for a while. It's speculation. We don't know, but we could see that kind of population growth for a while. So do we have the ability to ramp up across all of New Brunswick to meet our needs? And that's, here is probably my preempting the discussion, but what needs to be done, to me, housing is the big issue that threatens to undermine our growth potential and the quality of life for many of our residents. So the file requires bold, coordinated action from all sectors of society. So to me, the priorities are dramatically expanding the supply of construction industry workers. So there needs to be a tie into our immigration strategy. And one of the things that I found is that the last federal budget was a housing budget, but not a word about immigration. Okay, so we have work to do here. Then the second one to me is using policy levers to make more affordable housing. I use more affordable because I'm not talking just about typical traditional affordable housing. More affordable housing projects, more attractive, viable to developers, both in the for-profit and non-profit sectors. What am I trying to say here is that not deciding amounts to deciding. We've got a limited supply of labor. That's the major constraint. If we don't if we don't use any incentives, that labor will naturally gravitate towards the areas that offer the best risk-adjusted returns. And we've seen the slides about where those returns are to be found. So not deciding is deciding, but trying to steer some of that workforce from higher end projects in the larger cities towards other equally, probably just as socially valuable ends is going to be costly. There's no way that you can get people in a free market economy to lower their rates of returns willingly. So you're going to need to compensate. So how do you do that? My view is the rural and small town New Brunswick, I think there's need for major reinvestments to de-risk and enhance the financial viability of rental construction projects. The same applies to large cities. Okay, but I emphasize this one because currently right now the supply response outside the 3 CMAs is virtually nil. So what I'm trying to say is that, again, the message that I would leave you with is that we're faced with this problem, and unless we can crack the nut of supply, the labor industry supply, then in the short run, the market will decide where the resources are to be allocated. We've seen what the results are. And the only way in a free market economy to shuffle or reallocate some of the resources, because what's really scarce here is labor, okay, is to provide the appropriate incentives. And I think from what we're seeing right now, these incentives need to be way bolder than the ones we've seen before and should involve a response from all levels of government. This is not something that cities themselves can handle, in my view, but you guys know more than I do about this. All right, so I'm gonna stop here. I probably took way more time than I should have, but I thank you for your attention today. This is an important file and I'm happy to be here to share my thinking with you guys. Thank you.
Thanks, Richard. And don't go too far because we'll be back up here in a moment for the panel discussion. But by the way, we strongly agree this is not a challenge that cities will be able to solve themselves, nor should they. So we understand that we will have a role to play, but that other levels of government do too. And so we're doing our best to try to crystallize those asks and figure out exactly how we can all work together to be effective. Because as you've just pointed out, the challenge is quite ominous.